The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Monday, the 23rd of September. What we're looking at here is that the Dow is up 9 at 42,073. It's made an all-time high today, just a fraction. Now, this is not Technical Friday. We do that on Fridays where I get deeply into the Chapman methodology. But what I do have to say is that the pattern that we were looking at has unfolded, the cup and the handle says, yep, you can break to the upside. But in this particular pattern, very often, I can't put a percentage on it, but I'd like to say very often. Let's just say even if the very often is 40%, that's often. Right? I don't think it's 80 or 90%, but I think it is maybe even close to 50%. In this particular pattern, when you get the cup, the large cup, and then the handle pattern, when the handle breaks above, it very often, really, when I say very often, I mean that not a majority of the time, but so many times. One of the reasons why I call it one of my least favorite patterns, unless you can identify it exactly as the turnaround. Oh, I should show this. But yeah, I'll show it. Why not? Because it's the beginning of the week. May as well start off fresh. So let me get to this. Here it is. It's being covered. I can't see it. There it is. So this pattern that I developed ages ago as a formula, an analysis formula, where you get rising highs, and then all of a sudden it stops and the price starts to come down and you make lower highs, but much lower lows. And then it forms a base, and all of a sudden it takes out that declining trend line, the expanding cone formation, expanding cone, and that takes you to the higher high. Well, if you look at this way, you took out that falling axe formation, you've gone above it, and if you're able to identify this turn, which I did identify, but we chose instead, we had already been long the 3 times long Dow, and we've taken some off. Now we're back and looking at this long side, but we went into other positions because a certain amount of money that you've got, and that's what we want to do as a portfolio. Now, what's really interesting is that we've now gone within 3 bars. It actually turns out to be 2 bars for the Chapman instant restart. So this has gone to a D. There's just a chance because the stochastic is at 89%. That's fabulous. The MACD is good. The 9-period moving average in the daily chart of the Dow is above the 14. There's a really good chance that if we hold, and in fact, we do this, what I call a digestive phase, and we just kind of, for the next few days, we don't break down. We have some dips, but we stay in this range, and the Dow is above 41,700, 41,600. Then what we're looking at is we could start moving higher and can go to another peak, A, B, C, D in the Chapman wave methodology. However, look, the weekly chart has gone right into this inside track repellent zone. It hasn't been able to break above it. That's the weekly chart. All the technicals are very good. Stochastics at 89% here as well. So as I've said before, over the last couple of days, I think we're in as this digestive phase. Now, the rule of thumb that I have for this particular pattern, the cup and handle, and then the handle fails, says that there's a very good chance that you test the lip on the left side, which is at 41,585. We're at 42,093. We're quite a bit above it. So that's just to give you parameters. The resistance level, if I can just go here for a moment, right here, this is the Dow chart that I show to my subscribers every day, and I give my analysis every day, every market day. Look at all the resistance, automated Chapman 42,122 and 40,228. A lot of resistance there. Where are we right now? We're at 42,078. Oh, let me just check. Did I misread that? 40, 42,122.28. All right, so that's resistance. That's in the 120-minute chart. The automated Chapman wave daily is 42,515, quite a way above. All right, so as I'm looking at this right now, I need to move that away. Yes, so that means that there could be an instant restart, and this could be G/C in the 120-minute chart. I'm just, for those who do Chapman wave analysis, you know that most of this is really important because other things can happen, and you need to have you need to have your specs right there in front of you so you can look at what's working, what's not. All right, so the Dow all-time high, holding quite nicely up 31, starting, as you can see, over the last 3 sessions, starting to lose the upside momentum in price, but the technicals are still strong. I'll just quickly do this because once these two major indices start to pull back, if they do, then we're starting to look at a consolidation, just a digestive phase. And the S&P is up 16 at 57.19. It needs to go above 57 to, is that 30? I think it's 30. Yes, 57, 33, 57. 53, yep, to 57. All right, that will extend this leg, and it'll extend the weekly chart into this F/B alternate count, but everything here is strong enough, and we did the Groucho Marx eyebrows down here, and now we've gone above it. Let me just show you this here and this here right there. So it almost looks like I used to be able to do this. My grandkids used to love it when I did it. Wiggle my eyebrows, and that's what it looks like right here. All right, but we've gone above it. And there's a really good chance, as I'm looking at it, that this actually in the weekly chart could be a leg B. Wouldn't that be fantastic? And look at the monthly chart, finally above the resistance. So let me just do this real quickly. Here we go. 1, 2, 3, QQQ. QQQ is trading right now up 71 cents, a 483. It's really been struggling. It hasn't been making new highs. Not fading, but certainly struggling. IWM, same thing, not making new highs. Now it's up 56 at 222.11, acting well. We are along the Dow, we are along the IWM, we're along other things as well. Some of that fabulous moves. I'm expecting some digestive phase there as well. Let's just go on to I want to show you something interesting. So at symbol US, this is the bonds. So here is my very long-term chart. I don't know if I've still got it, but I used to have this going back decades and decades and decades. It used to be fabulous. But anyway, I've just got this right now that you can see. I've got it going back further, but what you can see is from 2013, the low of August at 109.732. Of course, that's changed the price. Let me see what it is now. It's 109.16. 109.19, so 109.16. Yeah, it gets smoothed out as a continuous contract price. Now, what we've got is this huge arch, a little lopsided arch formation, and you can see you've had a 40-year bull market in bonds, right? That means you've had a bear market in yields. When you look at this, and it's rallied, what, 2.36% or 23.6% in the monthly chart. Oops, it's that's a little it's a fuzzy sound, but I got the brakes coming up. I'll talk about this when we get back because it tells you that yields might not go all the way back down. We'll see. All right, I'll be back. Dow's up 30.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. We're back. Basil Chapman, Tiger Technicians Hour. We're looking at the monthly chart, long-term monthly chart of 30-year T-bond continuous contract. So 185. I wonder if it's still 185. Let me just check, because it gets smoothed out. As I say, nothing changes other than the price, because it gets smoothed out. 185 and a half, 1630 seconds. So it's 185 and a half. March of 2020, that's where we got the major low. We are still long the Dow from that level. We got positioned there. Now, what we're looking at is this arch formation came all the way down to the 111s, but you can see this rally has sort of stalled here. So my contention is that the normalization of bonds, and what happens with bonds, especially with the anything that's related to mortgages, if there is a demand, an economic demand for money, then why wouldn't yields go up? And that's what I've been talking about maybe for 10 years now. I've been saying, first of all, when I came to TFNN, I said I'm in the, my contention has been for some time, really quite some time, that there will be a Japanization of our bond yields. That means that yields just go down, down, down until they get to zero. All right. About 3-4 years ago, I said, uh-oh. I remember talking to Tom when I was in one of my interviews, and I said, I think we've made a low, and I think that yields are going to go up. When you've had a 40-year bull market in bonds, you've got to anticipate at least a certain duration of digestive phase, and that's really what we're in. And the normalization, as I say, all the time, that over the last maybe 7-8 years, there's been demand for housing and building. I don't see why the yields shouldn't have gone up. Just in a normal, they don't have to go up a lot, but they didn't have to go to zero. Anyway, that's just the marketplace. Nothing for me to do anything about, nothing I could ever do anything about. But what I can do something about is look at this chart and say, my suspicion is that yields will go down some, but to get the bonds back into the 145, like a 50% retracement, whew, that's going to be a big ask. Certainly it can do that, but what I am saying is that the 4-year, just over 4 years, 4-year down move in bonds, and now we've had a bit of a bounce since mid-2023, so it's 3.5 years, let's say. Yeah, we could have another one, but at some point, maybe what we're looking at is something else that happens with bond yields. Maybe they scream to the upside at some point later on. I don't know, but I just think to expect that we go back to zero or even just a fractional percentage in those years, I don't see that. I just don't see. I think we're done there. I think the great bull market in bonds, most of it has been achieved, and now we're in a big digestive phase, and then there's going to be a period where you've got to anticipate that bonds go below par. It happens. I mean, I don't know, some of you might remember there was a period where we're looking at bonds 88, 64. I mean, it's just nuts. But anyway, forget that. We're done with that. I just wanted to talk about it because Tommy brought us some very good points earlier on. And now what I want to do is say that in the short term, you've made your peak E at about 127.5, and here you are at 124.5. So yields actually are going up, even though the Fed is determined to try to get the bond yields down. Bonds are sometimes completely independent of the Fed. I don't know how that happens, but it does. All right, we're done there. Let's go to the next thing I want to look at here. And this is what I want to show you. Look, the VIX index, which is down 27 cents right now. It is off its lows. I should have typed that in. I don't want to go to that one that went to 65.75 back in August the 5th, where we got the Dow low, market low. And it was a carry trade. It was an aberrational thing. I do want to go to this one right here and say we've got 14.46. I'll type that in. 14.46. Here we are at 15.86. That was a long time ago. 40.86 was back in mid-August. And here we are towards the end of September, and we just stuck in this range. So as I see it, the VIX index is telling me that it is ready for a spike to the upside because it's held the 200-period moving average all this time. It doesn't have to do it. It just says, I'm kind of holding this level, and at any point I could have a big pop to the upside. And it could be just a sporadic, just a momentary thing. It could be a longer term. It doesn't matter. But what you're looking at is, you see these MACD and the stochastic? They're already way off the bottom. That was right back in that mid-August low of 14.86. So I'm just saying, I'm watching this closely. I don't have a signal yet other than the Chapman wave methodology to say, let me just show you something here. I'm going to go to, yes, let me just go to this. This is the SPLV. And this to me was totally, absolutely fascinating. This is the S&P 500 low volatility fund going into the high of the beginning of September, late August. So that was the week of September the 4th, where it went to a high, pulled back sharply, and then it went to another high back on the 16th of September. And now it's below that. But have a look at this. This is the S&P 500 low volatility ETF. And if I can just stretch over here. All right. And then the RSP. There we go. The RSP, this is the S&P 500 equal weight ETF, has gone to this big spike here after making that peak D, and it's a leg E in the weekly chart, and you can see they all have slightly different patterns. So this is the S&P equal weight, right? I'm calling this an E. It might change, but at the moment I'm still calling it an E right here. This is the daily chart. Leg E in the weekly chart. They could even be a 1, 2, 3, an instant restart. And now look at the SPY. SPY trading. That was an alternate count, E/A. And thank you to my backup, who reminded me that I forgot. Actually, I saw it and then I completely forgot to change it. There was an alternate count, but this is actually an F/B in the SPY daily. And none of the technicals are weak, and the stochastic's flat at 87%. So even though we have an insurance short position, I got to monitor this very closely, because even though I was saying the actual price movement over the last few sessions has started to show that it's getting a little bit tight. It's still acting very well, but it's not having those big spikes to the upside. And it's fascinating when you get these tiny little candles, how it forms this arch formation. Are we kind of doing the same thing now? Well, we don't know. But here again, look, so this is, and as I say, this has to be a leg. Oh, I need to talk about this. Technical Friday, I think I did mention it, but I did the early show, so I had limited time because I had so much to do. This is an instant restart in the weekly chart, but it's a restart after a peak C that went sharply lower, and it went 1, 2, 3, 4, 5, 6, 7, 8 candles before it made, on the 9th weekly candle, it made a peak D with a tiny doji candle. Now, my rule of thumb over the years is slightly changed. Now, my CD book, Introducing the Chapman Methodology, I don't know how I'm ever going to update that in a way that it can be current, because it's a CD and people don't use that. Is that the music? Yep, there's the music. Got all fuzzy. I barely heard it, but there's the music.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
So my point was that the SPY was doing something very different, that the S&P 500 didn't make its high while the low volatility did. And now we'll see, maybe the low volatility will start to pull back, make a slightly different pattern. Anyway, so with that said, I had a bunch of questions. Let me just get to them right now. So FXI, that is the China large cap, continued high. Remember I said that peak C1, C2, C3, and then a C4. If it breaks to the upside, it can give you that D. It could even be the start of a new up move. But meantime, this is very strong at up 62, 27.77. And I just needed to do something right now. I need to think it through. Do I want to do anything? No, I don't. All right, so the FXI, that all I can say is that I'm going to make it a weekly basis. Usually I'd make it a day, even though it's a monthly chart. But if on any week there's a close above 29, no, I'm going to make it 28.20. A close above 28.20 in a weekly chart of the FXI, this is the iShares China Large Cap ETF, would suggest that it makes its way within about 6 weeks to the 29.58 high that was made back in May. All right? And the key support now is this whole area with that inside track repellent, now propellant zone in the 2640s. All right, let's go on. Okay, so questions. So the GDX, the GDX has just gone to a higher high. Now, the big question for me was, in the chart wave notation down, there's really nothing much to do. The 9-period moving average is strongly over the 14. The MACD is rallying. The stochastics at 77%. I prefer if it was in 80% or higher. But most importantly, the relative strength, this gray line right here, is strong. And the weekly chart, there's nothing wrong in anything in the weekly chart. So the market vectors gold miners ETF is doing very well. Leg C in the weekly chart, leg D tackling, and this is what we had spoken about for some time, that I was expecting that it was going to tackle the left side high in this cup formation in the monthly chart. It might be a month late, but the high of April of 2022 at 41.61, that was kind of our target. And right now we've gone to 41.19. And now I can do this and say that could have been the peak C right there, and there's a D. Now I can talk about it and say, I was mentioning it before, and I'm going to say it again, that after a peak C that has a big cup formation and takes its time to get to a D, invariably that D becomes an instant restart. Now, I need to be clear about that. I just need to do something right now. Yeah. So I need to be clear about that and to say, I just want I'm busy here, did something, and that could become a little F right there. This is the E-mini. There was a question about that. So I just wanted to go back and say, this peak D, look, within 3 bars, it went to a leg E. So this could become an F/B right here. And so far, and I'm looking at this and I'm thinking, with the Middle East tensions and all, is there a chance that gold is finding its way higher because of that and not because of the normal aspirations of gold bugs? No, I think that this is very valid. And therefore, I'm considering that the gold, in a way, is almost independent, and that's what it's doing. So the GDX is really playing catch-up. It's done very poorly when you think about what gold's done. But finally, the monthly chart is about to tackle that April high. That's really important, number one. And number two is the weekly chart is just making higher highs and higher lows. I like that. That's why we still remain long in our gold position. what I call the portfolio for the subscribers to the opening call. I like this. If you look at silver, it was acting very poorly, then it played catch up, and now it's finally looking at that weekly chart. It's the second week that it's above the trend line of the Chapman falling axe formation. It's gone to a leg D. This is good action. This is really much better action. It was acting poorly. Now it's not only playing catch up, but it's actually in a way leading a little bit. That weekly chart is showing if the 9-period moving average by Friday crosses positive, that'll be a really good sign right there in the weekly chart. Stochastic still weak at 60%. So it's a work in progress. It's silver. I just want to show you high-grade copper. I was asked about that. Yeah, this is leg C. Whoops. Yeah, leg C. I don't think that was a higher high. I've done this so many times. My eye just says that I think it might have double topped. We'll see. That's the continuous contract on the 27th of August. It goes to where? It goes to 4.3195. 3170. Yep, and on the 16th, it wasn't higher. So this is your leg C in the week. So high-grade copper is starting to improve quite a bit. Okay, now the question came in. Let me see where it is. I did that. Oh, EEM. EEM is the iShares Emerging Market ETF, peak D in the monthly chart. Did make a G and then a pullback sharply. And I suspect this is now brand new leg B in the weekly chart. That's a good sign. And you've got your strong peak C, pulls back very sharply, goes to a D. That was the higher high. This one is. So we're going to see now, are we going to get an instant restart in the EEM? I'm just calling it a D for now. The stochastic's good at 87%. On-balance volume's good. The MACD is expanding. That's very good. 9 is over the 14. Prices way over the 9. This is a good sign that the emerging markets are actually, and this is that whole rotational thing that I spoke about. I like it. I think that this is good. And the weekly chart suggests that there should be a test over the next 2 weeks of the 44.64 high of the week of the 12th of July. That's not very far away, but yeah, you never know. But that's, I'd say, within a week or two, right? Okay. Next thing we're looking at here is question. Oh, Dell. I haven't looked. I wonder if I've even got Dell still notated. No, I had a note. Oh, yes, I do. In the monthly chart, went to a peak C and then had a really strong decline. And that means that peak C says, wow, you might even have an A and a B and a C underneath it. So with that said, what we're looking at is, did I get a question? Dell. Microsoft downgraded on fear its AI lead over Amazon and Google is gone. That wasn't a question there. Now we've got a break coming up. Hardly heard it. I'll be back. Dow's up 32.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust. The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, so just real quickly, Dell is trading at down 43 cents at 117.57, 117. Yeah, so I think this is just a retracement, and I think it's a retracement failure mode. The 9-period moving average in the weekly is still way under the 14. It's got a lot of work to do. It'll have to get to about 121 to 122 to even start to see that pink 9-period moving average start to get at least turn positive or touch the black line, the 14-period moving average. So yeah, I just see it as a bounce. I think it's stuck, and that 108 200-period exponential moving average has been like a magnet. And if it had to drop over the next 2 weeks, the 9 is over the 14 right now. So that's a good sign of the daily. But I just think that if it pulls back underneath 113, 112.50, 112.50, it goes under that. It says, uh-oh, be careful. That 200-period moving average becomes a magnet again. So I just think it's got a limited upside right now. But it's not failing. It's just kind of sideways. NVIDIA is trading down 70 cents today. It's the same thing. It's made its high at 140.76. I think it's going to take a while before it really starts to pick up and become a leader again. It just needs this digestive phase. Since June, it's been consolidating. No problem there. It's not breaking down. It's just consolidating. So what am I looking at? Over 122. Same as Dell. Over 122, it becomes more positive. Under 110, I'd say just be real careful. And my suspicion is that it's going to go sideways for a while longer. Next question came in Advanced Micro Devices, AMD. Oh, a little semiconductor chat today. Good to see you. Let's see. A, B, and then it fails, and it does another A, B. Yeah, Advanced Micro Devices is really not acting well at all. I think at 156 right now. It needs to get to 162 to 100, somewhere in the 162 area to say, wow, now I'm starting to find some strength and building cause for the upside, because at that point you'd see the 9-period moving average in the weekly turn positive. But I would just say it's not breaking down. It's just really not going anywhere. Stuck is a technical term that says digesting. I had the same question about ExxonMobil. Look, ExxonMobil is up $1.98 today. That is good action because of the crude oil move to the upside. But at the same time, it's really stuck in a rectangle formation. So if you can get it down in the lower end towards the 114s, and then just be real careful when it gets to 120, because that's when it starts to stall again. But ExxonMobil is a different thing altogether, because it gives us fabulous dividend, and it just has been within a rectangle formation, going from the lower end to the upper end to the lower end. So that's a little different. There you've got the visualization tells you that it's in a trading band going from the lower end to the higher end, and then back down again. Question came in about AG. AG is, whoops, there it is. AG is First Majestic, silver. Yeah, so that is, look, peak A, look for the lowest low bar, then count the peaks. A, B, C1, C2, A or D, but it could be a brand new A. And this one is, look, that 9-period moving average crosses positive, it could move up. It's not a great looking chart at 627, but it's starting to improve a lot, because if you look at the monthly, look at the W-shaped pattern in the 9-period moving average, the pink 9, and look how low it was there, and look how much higher it is there. It's trying to cross positive. So what I would say, only on price, it's holding very well. It's got supported between 580, 5.880 and 520. Oh, I'd say 550. I wouldn't like to see it go below that. 550. And if in the next 3 or 4 days it's able to tag 628 right now, if it's able to tag 650, it breaks into an area that says, wow, now I can make a U-shaped pattern that takes me to the 17th of July, high of 686. So it's a work in progress. It is the H pattern that's become, I'll draw it in because it's easy to talk about. It's not so easy to visualize it, especially if you're listening rather than looking. And that's the pattern I'm looking at. So yeah, the gold stocks, some of the very low price gold stocks have had fabulous percentage moves to the upside. That's what happens with a low price stock. When it moves up, gives a nice percentage. Again, when it moves down, gives a lousy percentage loss. Okay, so that's A, B, C. Could call it C1, C2. Let me do that live so that you know what I'm looking at here, because it did pull back very sharply and looks like it's actually started a new move to the upside. A, I'm going to give it the benefit of the doubt. Uppercase on the way up. A, B. I would automatically go C1, C2. There it is. And this could be a D, but if it goes above, let me make it simple. That could be a D from 4 or 5 days ago, sessions ago, at 634. Today's high is 634. If it goes to 635, I'm inclined to call that a brand new leg B. If it only goes to B and then comes back and the 200-period moving average this week it gets hit at 599, then I have to say it's a D, maybe an E. But in the meantime, if you're long, I suspect you're long because that was the question, I just hold it. I'd hold it. It's got to push away from the 200-period moving average of 5.99. The further away it gets, the less it's going to be activated. I'm reading this book on Einstein. I love it because, in a sense, I'm saying, that's like that. When I talk about a magnet line, the further away you go, the less adhesiveness that magnet has, and now you're a propellant rather than a repellent. So yeah, it's almost the same thing here. The further away you can get towards the 650 area, First Majestic starts to get stronger and stronger. Okay, next question came in about URNM, uranium ETF A, leg B, trading at 44.57. Spot uranium miners. Monthly chart had a huge pullback from peak D, but the 9 held beautifully. The weekly didn't. It went pink. So this is a work in progress. the 200-period moving average of 46.37. Was it CEG? What was it? One of those companies that I used to follow close. Yeah, CEG. Wow. Constellation Energy. Are you using something about uranium? Anyway, this is acting really well. I used to have this all notated. So the monthly chart, it got taken over. A, B, C, D, E. A very strong move. All right, CG's down 184 at 253 after hitting 270, 185. I'll be back in a moment. Basil Chapman, Tiger Commissions Hour.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry August 9th and 23rd for more live trading action. For this month only, use code LarryAug24 at checkout to save $50 off your first month as a subscriber to Live Trading Fridays for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryAug24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
As we go into this last segment, Starbucks 94.62, down $1.43. So this is a pattern in the den. It's called a diamond pattern. In a way, yes, you can call it that. It's also that oval pattern, stalk leg formation, but everything about it suggests that if it takes out 92 support, the next level that is absolutely imperative to hold is this huge gap up that it had on the 13th of August, where the low was 90.29 and the high was 96, over 96. So if it takes out, and then the last low was 90.18, that was just 2 weeks ago. So I'm just saying that if Starbucks takes out 93 support, it's at 94.52, and then starts to take out that left side and goes underneath 88, And the moment it goes under 88, the 200-period moving average of 87 becomes a target. And then the weekly chart has 91, so it's got 91 first and then the 88. But the way I'm looking at it right now, I think the upside in Starbucks is kind of limited, but those are the levels to watch. Now, what would happen is if it went from 94 in the next 2 weeks without taking out the 88 level, but in fact went to 100 point anything, just over 100, that's different altogether. That changes that weekly chart completely, at least for the moment. So where am I right now? We haven't had any new long positions. We stopped the other day saying, hey, we need some kind of a digestive phase. We had some really good gains in many of our positions. We've also got some very low price stocks. That means stocks in the single digits that are doing quite well. So it's a real mixed portfolio, and I'm happy. And all I can say is that looks to me like it should be a digestive week. So far, Dow's up 47, S&P's up 16. I could call that digestive, even though it's up. So have a wonderful rest of the day. Stay tuned for Steve Rhodes and great programming here at TFNN. Check out my opening call, daily newsletter. See you tomorrow.